America is entering a new, economic supercycle. Listen to the full version on the official dinarreport.com website and become our supporter on Patreon. America is entering a new, economic supercycle. Lynette Lopez, Sunday, October 20, 2024. Business Insider. No one's going to sound an alarm, blast out a text message, or shoot you an email about it, but the US economy is undergoing a historic shift. We are leaving one long period of expansion, what economists refer to as a supercycle, and entering a very different one. Over the past 15 years, the economy has been characterized by weak demand and low interest rates, a decade and a half hangover from the Great Recession. Now, experts tell me, that is coming to an end. The world has changed, and we are entering an era of higher growth, creeping inflation, and geopolitical instability that will reroute the flow of money around the world. A new era has arrived, but it's going to be bumpy. The good news is that this new era looks as if it will be unencumbered by some of the problems that put a ceiling on growth during the previous era. The most salient feature of the old period, economists say, was the risk of deflation, the possibility that a lack of demand would cause wages and prices to spiral downward, a trap that is extremely difficult to escape. In an effort to avoid that fate, policymakers in Washington pushed interest rates down to zero and encouraged all kinds of risky behavior among investors, businesses, and everyday consumers. Investors trying to reach their benchmarks had to creep out on the risk spectrum. Josh Hurt, a senior economist at Vanguard, tells me. Super cheap debt, he says, made it easy for businesses to overexpand and overhire. The pro-risk environment had some earth-shifting consequences. Silicon Valley put the internet on our phones, China blew a massive bubble in its property market, and the world started investing in renewable energy. But low interest rates did little to boost demand, and the economy consistently grew slower than it did before the crash, never notching above 3% GDP growth. It was only after the massive government stimulus, spurred by the pandemic, that the economy reached escape velocity, pushing up wages and starting to grow at a healthy clip. Now, economists say, we're entering a supercycle that will be characterized by three sweeping forces. First, higher interest rates will reward savers, making it more expensive to take risks. Second, geopolitical and economic volatility will generate inflationary effects, reintroducing the specter of soaring prices. And third, industrial planning will be increasingly influenced by national security concerns, altering supply chains across industries. How low interest rates wind up settling will establish a new gravitational pull in global markets, recalibrating the forces that determine where the economy is most likely to grow and where investment is most likely to flow. The new supercycle puts the economy in a completely new era, says Silas Myers, the CEO of Mar Vista Investments, which oversees $4 billion in assets. He warns that an entire generation of investors, lenders, and entrepreneurs have failed to embrace the profound impact that the new economic era will have on their businesses. We were in a time that was less demanding and more forgiving, Myers says. But that time is ending. One of the clearest signs that a new economic supercycle has arrived is when the financial rules go topsy-turvy. The previous supercycle was ushered in when the Federal Reserve, in response to the destruction caused by the financial crisis, cut its benchmark interest rate to 0% the first time the central bank went all the way to the bottom. The structural shift sent shockwaves throughout the world. Yields on treasury bonds tanked, meaning investors had to start taking some serious risks if they wanted to make money. This new adventurism pushed stocks higher and higher. Listen to the full version on the official dinarreport.com website and become our supporter on Patreon. Source: Dinar Recaps.